Hey everybody, DayTraderRockStar here, and a big happy new year to everyone out there tuning in. Well, actually, this is a little video putting out, but we might even consider this a podcast because I want to do a little talking about market conditions. I want to consider this the first market radar of 2023. We just finished up 2022, the last trading day of the year. It is Friday. It's about 9 o'clock. I'm putting out a series of videos, and this is the second one in the series. The first one, if you didn't catch it yet, again, 2 trade setups that we're taking every day now because of the volatility in the market. We're going to go into that, but there is a couple actionable trades that I like to take during the day to keep that income coming in as we wait for market conditions to get better for swing trades. Right now, the short-term trades are where it's at, and again, that's what the previous video was about. So today we're going to actually, or right now, we're going to first introduce myself. I'm DayTraderRockStar from Day Trading Radio. I broadcast live every single day, live on the air, starting at 7:30, again at DayTradingRadio.com. You might see the show on YouTube. You might see it on Rumble. It's also on TuneIn Radio. You could pretty much take it anywhere you want. And we've been doing this since 2007. And I've been in a lot of markets, and I've been trading actively since around 2006, 1996. That's when I really started getting going, trading full time. So a lot of time there. And over the time, I always like to say that, over those 25 years, I've learned every which way to lose money. And we've tightened that down to a few good setups. And imagine that, all that time to weed out everything that's not up there on the pinnacle of greatness, the holy grail type of stuff, which is something I don't throw around too often because there's no holy grail, but there is things that are very close to it. And, that's how we like to trade. But this video right now is part of a video segment I call the Market Radar, and we're going to kind of look ahead. Usually we send this out once a week for the members, Day Trading Radio. But considering this is the first one for the new year, we'll discuss a little bit more in detail and, kind of give a ballpark view of everything, or actually a bird's eye view of everything, and then we'll tighten up and we'll look at what's going to happen next week. So on a on the big picture, the bird's eye view, looking down at the market's been an awful year, and just awful. And we know the reason behind that. Inflation that came from spending during the coronavirus, the combination of, the interest rate issues now that we're having, the war between Ukraine and Russia, the supply chain issues, all these things happened over the last year, and it put a lot of pressure on the market. And you could go back right to January, and we're just looking at that. The first interesting fact, January 1st was like the top of the market. All right, that's pretty amazing. Probably January 1st, 2nd was the top of the market. We've headed down since January. Now, we made lows in October. We bounced back up, and right now, and again, I want to actually get rid of a lot of these. For the new year, I want to clean up this chart. That's one thing we're going to do. You might look at it and say, holy crap, look at all these lines on this chart. Well, what I want to do is I want to clean these up, and we're going to kind of just break it down. But these lines, I don't want to get rid of them all. We're just going to clean them up a little so you have a better view of that. Let me do that right now. All these narrow lines back here are more for my short-term time frames, between the 5-minute and the 60-minute time frame. And if we go out here, you can see a lot of those lines were due because of that gap close, which we're heading up into that gap close. And that's a good target, even though I said we're going to take a bird's eye view, just so I don't forget and put it out there for you. That is a good target for a gap up. If we gap up on Tuesday, that closing of that gap, and that would be about 38.48. 38.50 is our big cash number, and we've been talking about that. You can see the market got up here around 38.52, and we kind of pulled back. And this is over the last couple of days. So let me clean up the chart a little bit more. I want to take another trend line off here, or channel line. Probably don't need some of this stuff. That's the gap close. All right, so this inner line right here. Well, let's do this. Let me pause this for a second. All right, I cleaned it up a bit. The main thing I want to pay attention to is the big downward channel that started in January 2022. That trend line here that started at the top, we kind of cut through here, but we retested it. That's why we adjusted that trend line instead of taking the top there. At the end, when we start to see these retested, these levels, I like to. So, the top trend line could be off a couple points, but it does fit pretty well with the 1, 2, 3 pattern. So we're using it right now because it tested a few times back here. It tested it here. We chopped around it a lot here. Then we came back to it and tested it here. So it's a really good trend line. And it's something we're watching. Then we tested it here. And we're kind of pushing back. And we haven't really broken free of it. We tried to break free of it here. And then we actually got up to the retracement area of this 1, 2, 3 pattern. Now, 1, 2, 3 patterns is a basic concept that really identifies a channel before a channel is even really confirmed. But any type of retracement to a channel that's been established needs to be paid attention to. So we keep those on there. Now this is, again, like I said, the bird's eye view. The general consensus, and this is the issue I have, trying to determine what the market's going to do. No one really could do that. We can't predict the future, and everyone's going to go on TV and all the talking heads. The majority of them, I would say over 70%, are looking for the markets to pull back, and I understand why. The valuations are still high. The valuations are still high. The interest rates are still going to be aggressively, hiked in a way that it's extended out. And that's always going to put pressure on stocks. And we haven't come into that pivot area yet. And I think the market hasn't really confirmed or given us any clear reason to get in. So there's a lot of reason and probably a good bet why the market heads a little lower. Now, the question is, where do we go lower? And where's the low? And if that's everyone's wrong and we push higher, where's the low anyway? These are the million-dollar questions. There's a lot of moving parts. Of course, Russia and the Fed. If we had any type of pivot on either side of those two, catalysts, if there was some kind of agreement or some kind of something positive come out of the Russian-Ukraine thing, the market would pop. And if it was some kind of Fed speak that was, a pivot or something, the market would scream. It would actually scream. But that's not in our near future. All right? So the market here is saying, all right, are we close enough to the near future that this is it's all priced in and we expect it down the road? We do expect it down the road. How far down the road? Can we just start moving back up at this point? That is one argument. And that's an argument that seems worth, visiting and analyzing. The other one is, again, the forward PE on the market's about 17. They're saying that historically we need to be in a buy zone around 15 or 16. So what does that bring us down? I didn't do the calculation, but what does that bring us down on the market? Does it bring us back down to that 3,500 level? All right. I would feel good, with a signal. And the signals that I like are divergences. When we have momentum shifting on a big daily pattern like this. Now, we had a divergence back here. You can see the nice turn back up, and it had a little move. And a divergence is going to give you a move on the rotation, even though the bigger trend is down. It doesn't mean that we're going to change trend, which in this case, most divergences do change the short-term trend it's in. If I put a downward trend line over here, and you saw that divergence, that trend line was broken to the upside until we got overbought, and then the trend came back down. But that was difficult times back here in June, July, very difficult times, October. November, we came back down, and we were looking for a divergence here. We got a fast move down. I think there was a 60-minute divergence back here in October, and we actually had a nice rally. Our target was 41.28 overall after we got to that 4,100 level, but that trend line, we missed it. We didn't get to it exactly. We got very close to it, though. Got very, very close to it. That was that X marks the spot. It comes in, I always say, give or take 10, 15 points when you're looking at the big picture like that. And we kind of came back, popped, and then ran into resistance again at 4,100. So now you see the 4,100 here tested. here tested. We go back here. You can see we chopped around it. We actually tested it back here. We tested it here. The 4100 is a pretty decent zone that we're going to have to get through. And it was a nice reversal candle here too. I'm going to move this off. See that gap up in reversal. So that's a major zone right there. The 4100, we'll call it 4098. Right now you can see it. I mean, that is on everyone's radar. To the downside, everyone's looking at the previous lows. For the last week, 2 weeks almost, the market has been choppy sideways. Up, down, down, up, neutral. And if we look at some of our indicators, I see a slight divergence here. I see a slight divergence on the 9.3 stochastics there based off of this candle back here that came down. That's a closing low right there, closing low. This didn't close it, even though the candle goes down. Again, tip here, DTR tip. Closing lows are different. I like the closing prices better than the extension prices usually when we chart out things. I find that, so if we have a closing low that's lower than the previous closing low, but a higher stochastic band on than a closing low, that's a divergence for me. And we're actually seeing that divergence pop here on the chart here. Now, this signal is using the TC2000. This is a 14.3 divergence, but you can see it on the 9.3 too. All right, this is a 9.3 divergence. I actually have these inverted. I have the 14 on top and the 9.3 on the bottom. So, whatever reason. It is a 9.3. You can see the 9.3. 14.3 you don't see as much, but it is there. All right. So we go into how are we gonna get out of this? How are we gonna break out of this zone? That's a big positive, having that divergence set up. Now, there's a couple other things that we have to think about. We're in the midst of the Santa Claus rally. We're going to open up next Tuesday for the last 2 days of the Santa Claus rally. I think we could actually rally and kind of pop out of there on the, what do we have behind us now? Tax loss selling, which was a tremendous year for tax loss selling, right? And maybe it went all the way out. It was funny how we rallied at the end of the day. It was a pretty steep rally. And we could gap up and go on Tuesday and Wednesday. It'd be, it'd be a theory that might play out. There's a gap closed above us, which I think would be a good area to, if we actually opened up at that level, to see the market pull back from that level. If we gapped up to it on Monday. If we don't gap up to it, then we'll decide what we're going to do. Remember, one of the reasons we're focusing on shorter term trades, our short term poppers, our scalps, our divergences, our 5-minute, 1-minute trades, is because a rising tide rises most of the ships, and it's very hard to, you're going to be gambling at this point. If you're buying and the market goes down, you're probably, whatever you're holding is probably going to get pulled down with the market. All right. The opposite goes true. If the market pushes higher, what you're holding is going higher. But do we feel like the market's going higher? Do we feel like the market's going lower? Personally, I want the market to move a little bit lower so we can confirm a bottom. I don't mind the divergence here. The divergence is something that I could always go back and say, you know what, we had a divergence. That works. Almost 8-9 times out of 10. The catalyst out there are things that we can't control. Black swan events, Russia, Taiwan, China, the Fed, these little things that could spark the market. We start off next year, I think things are going to pick up a bit. But are we at the lows? Now, if we do break lower, do we get a better divergence? Do we take out the lows here and that the stochastics don't rotate down? I'd like to have a quality signal to feel comfortable saying, hey, it's pretty good to start looking at longs here, or maybe start nibbling at things, because the last thing we want is to, get into an Amazon or Google and it drops another 20 points. So I would say the 70% of the talking heads out there are looking for more downside. And that leaves us open for a little pop. And at what point do people say, well, we were wrong? 70% of the people were wrong. At what point does that happen? Or is that going to happen? I don't know. I'm kind of on that 70% of the people, and I think there is a better chance of a little rotation to the downside. But I'm going to keep it nimble, and until I really see, I think we're making enough good choices, enough good trades on the short-term time frame that we can actually wait for a signal. The signal could come as a divergence, which might be a divergence right now. I always say that if I get a big, over the last 2 days, I've had 20 divergence on the S&P 500 stocks, and then today was another 18. Some of them were carryovers, but a lot of these divergences show up anytime we have like 20 out of the 500 S&P. That's a good sign for the markets. Now look at this. This is the 4-hour chart. 4-hour chart is a big divergence here on a recent pullback. Now next week we're going to start a whole new week. I don't know what news is going to come out over the weekend that's going to move things, but I think the Santa Claus rally could give us a hope going into Tuesday and Wednesday. And then after that, we're just going to have to, really take it, analyze the market again, see what's going on. The data points that are going to be coming out, we have Fed minutes next week. We have some other data coming out, PMI, I believe. And these are all going to add. We actually have job numbers next week too. And this is a big one. First week of the month, we have the job numbers, the unemployment rate, non-farm payrolls, etc. And this will be on Friday. And there's a lot of other things that are coming up on Thursday and Friday. So it should be a busy end of the week next week. And maybe that's going to give us some catalyst to break us out of this tight consolidation. To the downside, one of the things I would look for, and I'll make a call on this, if we do get some downside, I don't think we get all the way back down to the lows. I think they fake us out. I think they drop it. I think there was a gap back here, if I can find it. Right back. Oops, no. Maybe we did close that. Yeah, we kind of closed that. I'm trying to find out what I was looking at before when I was cleaning up my charts. I think we were okay on the gap there. All right. Well, anyway, don't want to get too tied up there. Divergence looks good. Let's leave it at that. Divergence looks good. I'll finish my thought. I think there's a shot that we could just kind of flush out to these lows, and people will say, all right, here we go. We're going to go down and test the lows. We're going to watch the momentum here come back a little, but hold above the previous low, meaning the momentum hasn't shifted back and the buyers are still there, even though the price is taking out the lows here. So we get down here, we'll make a little circle down here representing maybe our buy zone, or if we do see a little move down underneath the previous low there, on the way down to previous lows, but we're not going to get there. We're already oversold, but we do put in a divergence. I would like that. The VIX hasn't played a part. I don't know if it is going to play a part. 60-minute time frame just got oversold. That's not bad either. Santa Claus rally is a good usually beginning of the year. We have the January effect. We're going to be looking at the Russell 2000 in the next couple weeks. And what would trigger the upside here? There was a, let me go out here on the hourly again. All right, this blue trend line. You can see how if we close in on it, you can see how actually we held it here, we kind of held it here, then we broke down through it, and then we came back and tested it and fell through it. I'd continue to watch this blue line for a breach of that, and a hold of it. And if we get back up to $400 or $4,000 on the S&P, I wonder if people will start talking about it. Has the market priced in what everyone's concerned about? All right. Short-term trading is where it's at right now. We do have a divergence. I am bullish going into the early next week, and then after that, we're going to take it day by day. That's basically as much as I could give you on this chart right now. I'd like to pull back. Let's take a look at the weekly, which I didn't do. Well, clear as day, the direction of the weekly is down. And there's no hiding that. That's pretty obvious. It hasn't turned back up. It hasn't shifted. That would be a big positive if this shifted back up. It has done that before. We get a nice pullback and then shifts back up, and we had a nice follow-through rally. But, this is, might not be back here. And we had and again, this was kind of a weekly divergence back here at the June lows. That was a nice weekly divergence. And then back here, I think there was probably a divergence too. It was a very steep divergence on the weekly. But here, it's negative. We got to keep an eye on it. All right, so in final, again, watch the 3860 for a move higher next week. The recent low here that on the 19th, well, actually, it was the 19th, whatever it was here, the recent low coming in here at 37.59 would break us down and kind of get that, maybe that little flush to get the ball started here to the downside. And to the upside, again, you could see that the tighter consolidation, if we look at it on the hourly, you zoom out, you can just see that sideways consolidation, even though up to the trend line, sideways, sideways, sideways. That trend line just looms big. It's a good 1, 2, 3 pattern. Each time we get through it, and if we could hold it, it would be a game changer. And it might change some opinions out there. This thing rolls over. Excuse me. We roll over here. We could not capitulate, but start selling off pretty fast. And we'll see. I mean, the barometer, the trifecta, I just put out a tweet to Jeff Hirsch, Stock Trader Almanac, to see exactly where we are in the Santa Claus rally and what level we need to be above for the Santa Claus rally to come out as a win for the first part of the trifecta, the January barometer, the Santa Claus rally, and the the January effect, I believe. Just an added bonus here. I want to just point out the cues here. Pretty much the tech stocks on the hourly chart. We left off with a nice inverted head and shoulders pattern. Inverted head and shoulders pattern is a downward channel which breaks the channel and then comes back tested and holds it. So I'll give you an example. How many people realize that lots of things derive from a channel. So you have that channel, you make a low, you make a lower low, then you break out and usually pull back, and that pullback comes back and it holds, and then we move up. So it's a channel break, it's a change of direction. Same thing on the head and shoulders top. When you have that upward channel line and you break higher and then you break lower, you come back and test it to the down, underneath it, and then rotate back down. So this is kind of an interesting setup going into the Qs, and that's something I wanted to just kind of look at, because tech stocks here have been, murdered. But we are on a daily, almost a little coil here too, downward coil, and kind of an outside bullish engulfing pattern that's set up, and then also showing up as a little divergence signal here on a 14.3. So that's on the Qs. Again, do we break down lower? Is there any type of catalyst to break us down or break us higher? Right now, the majority and the only catalyst we have is, one side of the ship being overcrowded. I think the majority of people are looking for lower levels. That could set us up for a rally. We'll stay tuned until next week. We'll be here with you early Tuesday, and to get started. Keep an eye out for some more videos. And I apologize for my throat today. I've been on air all day today, Friday. I want to wish everyone a happy new year. Again, this is the first market radar of the new year. I wish I could have more for you, something more definitive and more definite and concrete on how we're going to move from this level, but that's just what we are. I think we're positive going into the next couple days, and then we'll play it by ear from there. See you guys in the market. Happy New Year.